Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. We got to talk about this Fed taper thing, what it is, why it's important, and what stocks could benefit from this. And there's always a benefit to anything that happens in the market. You usually got to find out where it is. Now, this is one of the more important videos that you are going to see because if you've been listening, you've been watching, been on the email list, you've been subscribing, then you already know how this works. And if you've been here for long enough, you definitely know how this works. Right now, I'm not looking for what stocks are good in November. I did that back in May, right? I'm not looking for what's going to be good in December. We did that back in June. We are already looking to 2022 and we're using information to figure out what we need to do today to help us for tomorrow. And this is that opportunity. So I'm going to give you 4 areas that should do well and continue to do well as this taper thing rolls on. So let's first talk about what the taper is, what it means, and then why these particular stocks or these particular areas could be good. Fed tapering. Federal Reserve is the central bank of the United States. They help to create a functioning economy. A lot of times we focus on the president, a lot of times we focus on Congress. As the economy don't go well, we blame them. And yeah, they do have a big part to play, but the Federal Reserve also has a very big part to play. They do this in 2 ways. Number one, they are the ones who control interest rates. When I say interest rates, I mean really your bank, your credit card, all that types of stuff. If it has to do anything with interest rates, they are the controllers of that. When the economy does not do well or it crashes, like we saw in the coronavirus, like we saw in 2008, they cut interest rates. They do that to encourage borrowing. They do that to encourage investment. That means that, when I had my little Ally savings account, before the pandemic, I was getting like 1.5%. Things were good. Like that's a decent savings rate in this era. But when you cut it to 0.5 or 0.25, well, shoot, I'm not really getting that much of a benefit from putting my money in the bank like that. That forces me to go find better investments. That forces me to go buy things that are going to help me to beat inflation and make more money. That's the point. That is the entire point of cutting interest rates. When the market is too hot and people are buying up things at a rate that's not sustainable, that causes inflation, right? We have too many dollars in the market chasing too few goods. Again, that's how inflation is created. And y'all already know by the prices of turkeys and PlayStation 5 and all these other things, we're in an inflationary period. And the Federal Reserve is starting to take action. We also know, we had some data this week that unemployment is going in the right direction. Things are moving in the right direction. The economy is recovering. It's not recovered all the way, but things are trending in the right direction. This is why the Fed is starting to taper and say, okay, look, we did all these things. Now we're going to slowly start to step back and let the economy take its course. And you move in the right direction. You're starting to take the right steps. We get to take the training wheels off. That is what's going on. So number one is the interest rates. Number 2, though, the way the Federal Reserve does this is by buying and selling assets. When we say buying and selling assets, it means buying bonds, U.S. government bonds. And when you buy something, or especially when the Federal Reserve buys something, that means they are giving cash, essentially, right? If I buy something from you, you have cash. What do you do with that cash? You save it, you spend it, and you have more money. That is the point. So right now, they were buying about $120 billion per month of U.S. government bonds, which means these bondholders were getting cash. They were using it to buy homes, to buy assets, to just really flood the market, which in some ways, yes, does create inflation to a degree. But again, they've been propping up the market and really injecting cash by buying all these bonds. Again, $120 billion every single month they are buying and really pushing money out into the market to help the economy along, to help the economy grow. Well, taper means they're not going to buy $120 billion next month. They're actually going to cut it back by $15 billion a year is what they not a year, $15 billion per month, and slowly kind of take a step back, take a step back, take a step back, which is a signal for a few things. One, it's good that the economy is going in a good enough direction where they get to take the training wheels off. This also means that at some point, which I've talked about this before, they're going to raise interest rates, which is another sign that the economy is going in the right direction and that They're trying to raise interest rates to starve off inflation and kind of pull inflation down just a bit. These are good signs that the economy is going in the right direction. Well, if the Fed starts to taper, which they've already said that they are, and when interest rates are going to rise, which they will, they can't stay at this rate forever, then what companies and what industries are going to benefit from it? Number one, I've already told you, financials. I'm telling you now, I've been saying it, I'm not going to repeat none of the company names. You should have watched them videos. They still up here. You can easily search those. So check out all the financial companies because they tend to benefit the most from a raising interest rate environment. Why is that? Well, think about it. If I make money on credit card interest or mortgage interest or personal loans, all that kind of stuff, and interest rates go up, my profit margin goes up. And when I was charging you 3%, now I get to charge you, 10 or 5 or what have you. I get to keep more of that money. That helps me. If the economy is doing better and people are going out there and doing more things, taking on more loans to start more businesses, that helps me as a bank. So that's number one. Number two, consumer discretionaries. Guess what? We did a video on that. I'm not going to go into that anymore. As people are becoming more employed, they're going to have more money. They want to go out and enjoy things. As we are becoming more vaccinated, people are going outside, spending more money. Again, when the economy does good and you spend more money, you feel better about what's going on. There are companies that benefit from that. Talked about Target, Dick's Sporting Goods, Bath and Body Works. If I said that correctly, if y'all watched the original video, you know I said that wrong so many times. So those are two we've already covered, but there are two other areas that tend to do well. I had some notes here, and my computer kind of timed out on me. Two new categories that tend to do well as well. You got materials. So these are manufacturing companies. One that's on my list for now is called Mosaic. That ticker symbol is MOS. Y'all want a bigger breakdown on this materials sector of the market, feel free to type that in the comments. We can do that. And then you've also got energy. I know energy for some people can be a touchy subject. However, energy has done quite well pretty recently. Not enough people are really talking about it. But also, as we're going out there, as even green energy also counts in this category as well. But as the economy starts to grow, people consume more energy, they build more things, they go back to the office, and we're expected to see an uptick in energy prices, but also, as we've seen in gas prices, but we tend to consume and use more energy as we are going out back into the world and things open up fully. I mean, I think of it like a theme park. It's been operating at half capacity, and then when you need to turn all the lights on when everything comes back to normal, it's a place that you want to consider. So some of those, Devon Energy, EOG Resources is one that's really looking good on my list. I added to my public stock list, and it's gonna be something. I think it might be something. So I'll do some more research and decide whether or not I'm going to invest in it in December as I complete my research. So those are just two. I think I had another one here. ConocoPhillips, another one that is ticker symbol COP. So you've got ConocoPhillips, EOG Resources, Devon Energy, and then you've got Mosaic, ticker symbol MOS. Just ones to look at now, but again, we have to think in November of 2021, what are going to be the themes of 2022, right? What are going to be the places that are really poised to grow and almost have to grow, right? We know interest rates are going up. We know the taper is coming. We know the economy is growing. These are all good things. What happens in the market when these things occur? We know energy tends to be a good spot right around this time as things are expanding, and then we know about banks, we know about consumer discretionary, and we know about materials. So those are the four places you want to look. Two of them we've already done videos on, so we can consider, depending on what y'all say in the comments, about the others. Now the last thing I'll bring up is the year 2013. Okay, in 2013 the Fed also tapered following the 2008-2009 financial crisis. And the market did not react in the best way. The market, they called it the taper tantrum. That is possible to happen this time around. I don't think it will be that severe. Why do I say that? Again, the Fed has been talking about tapering for 4 months now. Okay, so it's been priced in, as they say. People have been talking about it. It's not something new, and it's going to happen over a period of months. So you're starting at 120 billion and you're stepping back by 15 each month. It's not like they're going to just end it tomorrow. So I don't expect, well, the market's going to be crazy. The market sometimes just reacts in a ridiculous way. However, I don't think it's going to be as severe as 2013. The good thing is, even if it's the case, right, long-term investors aren't just thinking about, well, just 2022 and that's just it, right? If I can start to get some things at what could be a discount now, right? If I'm getting energy companies now, if I'm getting financial companies now, it's really going to look even better in 2022. But let's say, worst case scenario, 2022 isn't what we expect. It's not going to be good because of the tapering and the market takes a little dip. It doesn't mean it's going to be dipping for forever. We saw this last year with the coronavirus where it dipped for like 45 days. It was really bad. And then the market was up double digits by the end of the year. If you invested from 2013 to now, you're looking real good. Okay? Go back in time and look at what would have happened, or what would have happened in Tesla if you had got it back in 2013. Okay, that's all I'm gonna say, right? But again, I don't think, because we've seen it before, and they've been kind of teasing it out and drawing this thing out, and they also have not announced when they're going to raise interest rates. They said that's decoupled, right? That's gonna come way down the line. So I still think you're gonna be good, especially if you're in financials. I think energy could be good. I think discretionary and materials. Those are the 4 areas that you do want to consider. Whew. All right, that is it for me. Let me know what you think in the comments below. Any companies or areas you want me to cover, make sure that you sound off in the comments. I do what y'all ask. You ask your questions, I put out good videos. Last thing that I need you to do, make sure you sign up for the email list. It'll pop up down here at the bottom why I am releasing a new product, a new series, whatever it is you want to call it. But I'm only going to open it to people who are on my email list first. Okay, it is a really cool thing that we're working on that helps us to analyze and choose good companies, because a lot of people have been asking me, well, how'd you know about Etsy? How'd you know about this? How'd you know about that? I mean, I do be telling y'all, but there's a very specific process that I use that I want to open only to people on the email list. You will want to join the rate list when it's out. Okay, I want to release it on December 1st, but I'm just telling you now, if you're watching the video, you're listening to my voice, you're opening emails, you need to be on the email list because they're gonna get it first. I'm just letting you know that right now. Okay, all right, so that's it for me. Talk to you guys later. Bye.